Ladies and gentlemen, good day and welcome to the H2 FY26 results conference call of Invicta Diagnostic Limited, hosted by Kirin Advisors Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Parth Acharya from Kirin Advisors Private Limited. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. On the behalf of Kirin Advisors, I welcome you all to the conference call of Invicta Diagnostic Limited. From the management team, we have Mr. Rohit Srivastava, Chief Financial Officer and Whole-Time Director of the company, Ms. Sonia Nilesh Mahajan, Company Secretary and Compliance Officer. With that, I now hand over the call to Mr. Rohit Srivastava for opening remarks. Over to you, sir.
Thank you, Parth. Good afternoon, everyone. On behalf of Invicta Diagnostic Limited, I welcome you all to our first earnings conference call. Thank you for joining us today and for taking time to understand our business, growth strategy, and long-term vision. This is an important milestone for us following our listing on NSE emerge in December 2025, and we sincerely appreciate the trust and support extended by our shareholders, investors, analysts, healthcare partners, employees, and all stakeholders associated with our journey. Invicta Diagnostics operates under the consumer brand of PC Diagnostic and is focused on providing integrated diagnostic services across Mumbai metropolitan region. Our business is built around advanced radiology services supported by pathology offerings, enabling us to provide comprehensive diagnostic solutions under one platform. Today, we operate 8 diagnostic centers in the Mumbai metropolitan region and 1 in Nashik, offering advanced imaging and pathology services through an integrated hub and spoke model. Radiology remains the core strength of Invicta and our business, given its high entry barriers, technology intensity, and strong operational capabilities, while pathology complements the patient ecosystem and enhances the service there. Our journey over the last few years has been focused on building a scalable and quality-driven diagnostic platform across Maharashtra. We started our journey in 2021 with the establishment of our first fully integrated flagship diagnostic center in Thane, offering advanced modalities such as PET-CT, MRI, CT scan, X-ray, sonography, and pathology services. Over the last few years, we have steadily expanded our network through strategic acquisition and diagnostic centers across multiple healthcare sectors such as Andheri, Baikla, Bhayandar, Shivri, Parel, Kalwa, and most recently Dadar, where we commenced operations earlier this year. This expansion has strengthened our advanced radiology capabilities while deepening our presence across densely populated healthcare markets. One of the key strengths of our business is our disciplined and calibrated growth towards the diagnostic centers that we put up. We focus on building full-service diagnostic centers with strong clinical capabilities and carefully evaluate every expansion opportunity based on operational viability, patient catchment, and long-term profitability. Coming to the operational highlights for the second half of FY26. During the second half of the year, we undertook multiple strategic initiatives that we believe will strengthen our long-term growth trajectory. We have entered the Pune market to set up one of the marquee centers offering the highest end of radiology services in India. This includes a 3 Tesla MRI and a cardiac 120th slide CT, and also the setup of a full-fledged clinical pathology setup. This center, wherein in addition to the advanced facilities mentioned above, we will also be offering services of mammography, digital X-ray, along with the scans such as EEG, EMG, NCV, 2D echoes. This center which we are setting up is in the first diagnostic center in Pune in South Pune rather to have a cardiac CT facility. And we expect this center of ours to be operational by the month of June. Another important milestone was the commencement of the commercial operations at our Dadar center towards the end of January 2026. The center is strategically located near Tata Memorial Hospital, where there is a high demand for oncology diagnostics. And this center offers services such as PET-CT, CT scans, sonography, pathology, and X-ray. This setup further strengthens our positioning in specialized and high-valued diagnostic segments. With regards to expansion to new geographies, we have also entered Shegaon, a town near Akola, for the setup of a CT scan center within a 100-bedded hospital by the name of Sant Nagri Multi-Speciality Hospital. This is one of the largest hospitals in the district, and we have entered over there for CT scan setup, and we'll be exploring further opportunities as the hospital becomes full-fledged operational. We expect this center to be operational between June to July. We also marked a strategic entry into Nashik through the acquisition of Invicta Diagnostic Private Limited. This transaction, unlike our previous greenfield project, is actually an acquisition where we have agreed to acquire a 95% stake for a total consideration of 10.6 crores. We only completed the first phase of the transaction through acquisition of 51% controlling stake. This acquisition provides us entry into a well-established healthcare market. In addition to that, it allows us to leverage one of the oldest brands in the center of in the city of Nashik, and is very much in line with our Maharashtra-focused expansion strategy. Coming to the financial performance, for the second half of FY26, the total reported income was 15.96 crores. The EBITDA stood at 3.55 crores, and the net profit was at 0.79 crores. The EBITDA margin for the second half was 22.4% during this period. For the full year FY26, total income has increased to 33.04 crores from 30.18 crores in FY25. EBITDA increased to 10.45 crores from 9.29 crores, while EBITDA margins improved to 31.60. Net profit for the year stood at 4.87 crores with a net profit margin of 14.74%. At this stage, it is important to highlight that the company is currently in an active investment and expansion phase. During FY26, we continue to invest towards network expansion, infrastructure strengthening, and long-term capacity creation, resulting in cash outflow of approximately 12.96 crores towards the purchase of fixed assets. As part of this growth phase, depreciation expenses increased by approximately 31% to 3.25 crores in FY26 from 2.49 crores in FY25, primarily reflecting the higher asset base created during this year. While newly operational centers are currently in the process of scaling up utilization and the patient volumes, we believe these investments are laying a strong foundation for future growth and operational scale. As our recently added centers continue to mature and ramp up operation, we expect stronger revenue contribution and improved operating leverage in the coming periods. Looking ahead, our focus remains on disciplined expansion across Maharashtra, with continued emphasis on advanced radiology services. We aim to significantly scale our network over the next few years while maintaining operational efficiency, clinical quality, and capital discipline. We also see long-term opportunities across Tier 2 and Tier 3 markets through partnerships, selective center additions, alongside physical expansion. We continue to evaluate technology integration opportunities, including AI-enabled radiology reporting, to improve reporting efficiency, scalability, and clinical accuracy over time. We remain committed to building a differentiated and sustainable diagnostic company focused on healthcare quality, delivery, and long-term value creation. Before I conclude, I would once again like to thank all our stakeholders, including our doctors, employees, shareholders, healthcare partners, and patients for their continued trust and support. With that, I would like to open the floor for questions and answers. Thank you, everyone.
Thank you. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and then one on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Again, to register, please press star and one. Your first question comes from the line of Mahesh Sheth with VY Capital. Please go ahead.
Yeah. Can you hear me?
Yes, sir, we can, but it's a little feeble. If you can be a little louder.
Yeah.
Yeah, please go ahead.
Is it clear now?
Yes.
Yeah. So, thank you for the opportunity. I wanted to ask, like, our revenue growth has moderated despite ongoing expansion. So, like, what are the key operational factors currently limiting faster growth?
So, let me answer that in two ways. First of all, our current centers which are there are mature centers. Their capacity to grow the additional revenue would be more towards organic growth. We have invested in machinery over there so that we can cater to a higher patient volume. So that should increase our growth. But majority of our future growth would be coming from new center expansion. So at this point of time in FY26, we have expanded only one new center, which is the Dadar center, which has come up, and it started operation on 30th. So far it has reflected only 2 months in this particular financial year. So going ahead with our expansions, once the centers become operational, you would see revenue growth coming from there. If your question was more related to why there was a dip in the overall sales in the second half compared to the first half, this was primarily, this is a very common to most diagnostic companies, because the first half of a financial year accounts for almost 55% of the sales, whereas the second half accounts for around 45%. The reason behind this is the fact that in the first half, we get the month of June, July, August, and September. These are called the peak periods because of monsoon, wherein the number of patients who are falling ill is higher and there are a higher number of diagnostic tests being prescribed. And the second half, we have got the month of December and March. December is a very healthy month because of the temperatures which are there. It's very pleasant, and usually the patient volume is seen lesser in the month of December. And March, because of the summer, as well as there are a lot of holidays with regards to travel. So that's why the diagnostic tests which are done during each period are lesser. So that's why you see this kind of case to be across all the entire diagnostic industry.
Okay, got it. And radiology contributes more than 90% of revenue today. So,
That's right.
do you expect this mix to remain similar going forward, or will pathology become a bigger contributor?
So we are a radiology-focused company. We, in fact, majority our IPO proceeds have entirely been utilized for the purchase of radiology equipment, advanced equipment. The radiology focus will definitely continue. However, we are going to have focus on pathology to increase it as a percentage of the overall turnover, but we will continue to be a radiology-dominated company where radiology services share of the overall sales.
Okay, got it. And as you said, like, you'll be increasing the pathology's contribution to the revenue. So what strategy is being, followed to scale this pathology meaningfully?
So basically we have stayed away from the home collection market. Prima facie, it has become a hyper-competitive place over there with the likes of Pharmacy, Pharmacy, everyone looking to cater to that. So we have stayed out of that on purpose because at this point of time, people are willing to burn money to acquire market share. What we are focusing on is growth through pathology, where ancillary tests which come with our radiology are done. So that is what we are primarily catering to. We are also looking to increase our outreach towards doctors or additional pathology coming from them within these particular centers itself. We are not looking to get into the hyper-competitive market of healthcare checkups and home collection aggressively.
Okay. And I also want to know, like, what is the current utilization trend across your major radiology assets, like MRI, CT, and PET-CT? So how long does a new center usually take to stabilize operationally?
So basically, let me first talk about where our capacity utilization is at that point of time. In our existing centers, which have been operational for a few years, we are at very mature stages of utilization between 75 to 85% of capacity utilization. This capacity prima facie is unique to MRI because with CT, we do not face a challenge. We, as in COVID period, we have seen diagnostic centers do 100 to 200 CT cases in a day. So that challenge is not there. But with MRI, there are huge capacity restraints. So when I talk about capacity utilization, it is primarily I'm talking about MRI because the number of scans that can be done is limited during the whole day. We are looking to expand this capacity by investing in machines which can do faster scans, by investing in tech which can reduce the time which is taken for the scan through AI selection of images being more efficient with regards to the managing of patients at the center. Those are the ways in which we can increase this capacity, but at this point of time, we are at 75 to 80% capacity. With regards to the second part of your question as to how our operational centers go, our goal usually is to achieve operational break-even for any diagnostic center which is set up within 6 to 7 months of its setup. That is usually our goal. That is what we have seen in our history, that usually centers break even, achieve operational break even during this period of time. After that period, we see EBITDA contribution coming in from these new centers.
Okay. Okay. Got it. Thank you for answering.
Thank you. The next question comes from the line of Priya Jain with Green Capital. Please go ahead.
Hello, sir. So I have a few questions. Firstly, I'm new to Invicta, and I'm joining the call for the first time. My first question is, how difficult is it currently to hire and retain skilled radiologists and technicians, especially while expanding into newer cities?
So the hiring of skilled staff is always a challenge. But given our network and outreach that we have developed over a period of years, not just to MMR, but our network that we have with a lot of radiologists across the state, the challenge is somewhat mitigated. This challenge is particularly common with regards to sonography, because for sonography, the radiologist himself or herself has to do the scan by his hand. So that becomes one of the challenging pieces with regards to recruitment. With regards to the reporting for CT and MRI, that is not really that much of a challenge because teleradiology allows us to report all of these cases from anywhere in the world. So that doesn't really impact us. But we have got a sufficient network across Maharashtra that we are able to hire quality staff for each of our new centers.
So how many centers are currently operating below break-even level?
So at this point of time, we've got our newest center, which is started in the month of, January end, which is operating, which is not operationally broken even as yet.
Okay. I will come to Q, sir, for follow-up question. Thank you.
Thank you. The next question comes from the line of Amit from MIT Engineers. Please go ahead.
Am I audible?
Yes, sir.
Yes, sir.
Please go ahead.
Yeah. The first question is regarding the IPO objects. Now, in the IPO, basically, you raised the 21 crores for purchase of the medical equipments toward establishment of the 5 new diagnosis centers in Maharashtra. So can you tell me how much money from that 21 crores have you deployed already?
So in the last financial year, we have already disclosed, we have basically, for this amount, we have just utilized 2.27 crores at this point of time. So 30.
Okay. So when you will, utilize the remaining fund? Timeline, can you tell me?
So basically, at this point of time, like I said, Invicta Diagnostics is one of the acquisitions that we're doing through an IPO fund, right? Over there, we are going to be deploying our Pune center, which is coming in. Over there, the deployment would be happening. Our Shigaon center, which is coming. Over there, also the deployment would be there. And for the payment of the PET-CT machines at Dadar, those funds would be being deployed. So that is
my simple question, sir, sorry to interrupt, but my simple question is, you raised 21 crores, how much time it will take for the complete utilization of that fund? I just want a timeline so we can understand, how the, growth will kick in.
Sir, at this point of time, if I have to give a timeline, ideally we would like to deploy this entire fundraising, complete this entire deployment within this financial year itself.
Okay. Now the second question is, I think in FY26, the number of the tests performed is reduced considerably from 176,248 to 154,675. So there is, number of tests performed is reduced.
I could not hear.
Hello?
Yes, sir. Can you come again?
Yeah. Actually, in the FY25, the number of the tests performed something about 176,000. But in FY26, it reduced to 154,000. Can you tell me what's the reason for that drop in the test performed?
Yes, sir. Basically, our philosophy has always been with regards to all our equipment, right? At the start of it, we start doing a lot of discounted tests because we've got excess capacity which needs to be filled. So we look to get the capacity utilization as close to maximum that we can. Once we start achieving that, it is not physically possible for us to add on more number of patients over there. So at that point of time, what we start doing is that we increase the pricing, right? So a few of the clientele which are on the lower side of it, they start dropping off and start again going to government centers rather than coming to us. But our overall pricing which is there goes up. Or the net realization per test goes up, per patient goes up.
Okay. And now the third question is regarding, the H2 performance. Market doesn't like the H2 performance because H2 is really a shocker. Because, 79 lakh rupees profit, we were never expecting from the company like you. So can you tell me, if you repeat it in the H1 FY20, the fear of the market is that if you repeat this in the H1 of FY27, then it will be disaster for us as a shareholder. So can you assure us and give us the guidance, what top line and the bottom line we can do in the H1? Because H1 is the seasonally heavy. So that's why, we want some clarity.
Sure, sir. So let me answer that since you have asked this question with regards to the second half performance. If you see our differentiation which has come in during this period, it's particularly for this over this 6 months, around 55 lakhs has come in because of additional depreciation that has come in, and 77 lakhs has come in because of other expenses. These other expenses, sorry, I beg your pardon, and 140 lakhs has come in because of employee benefit expenses. So these, what happens is in the second half of the year, of any particular year that happens, the bonuses, the Diwali bonuses, the year-end bonuses, everything gets recorded in the second half. So that is why jump which is seen is in the employee benefit expenses and the depreciation which is there. And the second part is, as our normal business cycle, we have, the second half of the turnover, second year has been of the turnover has been approximately, 48%, and the first half has been around 50% plus. So that's why there has been a dip of sales compared to the first half of around 1.5 crores. This is what is actually accounting for it. If you see me on a year-on-year basis, we have grown. We have grown both on our EBITDA as well as my sales. The PAT is very much a function of depreciation which gets impacted. So you've got to understand the line of business. We are a very capex heavy business. As I expand, depreciation will continue to grow for me. So I always ask my investors and analysts to look at me more from a operational profit perspective that continues to grow. Whereas anything below the operational profit is, those are tax adjustments with regards to depreciation, with regards to, deferred tax and everything. So that is where the differential is. So as long as my focus will always be my EBITDA, where my agenda would always be to grow that year on year.
Okay. And what is your guidance for the, because already 2 months passed, so, and you must have the clarity now. So what I'm talking about the full year guidance and even the H127 guidance. Most of the companies are giving, SME that they are targeting this. So can you give us the guidance to calm down our nerves?
So rather than getting specifically in the figures which are there, I would talk about the growth that we are achieving, right? So with regards to Invicta Diagnostic that we have acquired, last financial year they had a top line of around 5 odd crores and a 30% EBITDA of 1.5 crores, right? That is what they have closed. We have taken on that 51% and will be acquiring the balance portion, within the next 3 months. The second part is my diagnostic center, which is a PET CT center. We have been achieving a profit for the last 2 months. We are expecting, we've been doing around between 15 to 18 lakhs of top line over there for the 2 months which was there. So these will continue to grow. My CT MRI center, which we're setting up in Pune, those are, like I mentioned right at the start, it's a 3 Tesla MRI and a cardiac CT. We have high expectations of growth over there also coming. I would not like to get into specific numbers because those would be market sensitive information which I might be breaching IPO.
No, sir. Sorry to interrupt. You are having a legitimate right to at least give the investors once the listing is over. During RHP filing and the IPO, you are restricted, but now you are not restricted. Every company in the FME, they are giving us the guidance, and they are giving us the guidance in the return. So there is no problem in that because you must give the guidance, sir. Little bit of guidance, percentage, and I'm not talking that you are going to perform that. But what is our expectation from FY26 to FY27, 30% CAGR growth we are targeting with this IPO money? That too you can say, sir.
So let me defer this to our compliance officer. Let me just this. Ms. Sonia, if you're on call, can you just confirm, what sir is saying, whether we are in a position to disclose this?
Okay. Hi, this is Sonia Mahajan, Company Secretary. Sorry, sir. Actually, we would not be in position to share any information that has not been publicly disclosed.
sorry, madam, you just go to the SEBI guideline. Once they IPO listed, you can, in the, conference call and in the public information, you can disclose what company is targeting. Even the main board companies are giving, I can give you 20, such examples because I'm having 100, investment, 100 of SME companies. And every company is giving, last night, Freshera Agro gave the 50% guidance return. I can send you right now. So you just recheck because, we investors are worried about the growth. We like the business, we like the promoter.
Let me address this query of yours. We'll do a double check on this. This is what our compliance guided on us, right? Sonia, kindly take this into account. If this is permitted, we will come back with.
You can give the notification also. Nothing wrong in it. Every company is giving notification.
I can give the answer. What can I give?
Yeah, even you can give the notification on the exchanges, so everybody will get benefited, and it comes the now.
That's the thing, sir. Whatever guidance note is given, we will give it to NSE so that it would be available for the entire public.
Yeah. And even if your company secretary wants to talk me directly, I will provide her at least 20 examples and the SEBI guidelines things also. So it will be very good for that. Okay. Thanks a lot.
Yeah.
Thank you. The next question comes from the line of Abhishek Bhattacharya with Smiths Limited. Please go ahead.
Hello, sir. Thank you for the opportunity. Yeah. So what I wanted to ask is that what is the current progress on Pune expansion, and when can investors get a meaningful contribution from Pune market?
Sir, we are expecting the center to be operational in the month of June, right? And any center that we start, our goal is to have, right, as I mentioned, that our goal is that it should be operationally breaking even within 6 months. So for EBITDA contribution to start coming in, it would take at least 6 months from there, sir.
Okay. So which are the upcoming cities that are currently under evaluation apart from Pune, Nashik and Akola region?
So, we are continuing to, rather than focusing on just cities, we are looking at building more networks. So, for example, we are exploring multiple locations. We are including MMR. We are looking to expand within the MMR region itself. We are looking at Pune also because just one center in a particular city will not probably build in the efficiency as much as having multiple centers. So we are looking at Pune, also at Nashik. We are also looking that if we can have, because over there is also large space, we are looking over there, but we are not limiting ourselves. We are also looking at other cities within Maharashtra where we can set up operational centers, but entirely based on research where we do basis the number of referring doctors which are there with regards to orthopedics, neuros, what is the overall current load that the existing centers have, what is the population XYZ. So this is all research based that we look at, but there is no particular cities where I could tell you that, okay, we are interested, but we are more interested in Pune where our existing centers already are to increase our reach and build in more operational efficiency because of that.
Okay. But I know you already answered, but I just wanted a more brief about how do you select a city or micro market which is attractive enough for expansion?
So basically one of the first guidelines that we take is the MRI centers which are there. So the population density, if it is less than 1 MRI to 7 lakhs of population, then that becomes an interesting proposition for us. That is the first tick box. The second is what are the referring doctors, the referring doctors that are there, whether how many orthopedics, how many neuros are there. The third point becomes the government hospital over there, which is there in that particular region. What are the number of scans that they are doing? do they have MRI facilities available? And if they do, what are the caseload that they're doing and what is the waiting period? These are the few basic things that we look at. And of course, the fourth one is that our competitors, what is their caseload that they're doing? And, even if we take a percentage away from them, would that still be profitable for everyone? So basically, in a place where let's assume that there at any diagnostic center in a particular area, there is a wait list of a day, or there are patients who are bouncing and there are in a particular day, a center is losing, let's say, around 5 to 7 appointments on a daily basis because of the fact that they are unable to adjust the timeline, then that becomes a good opportunity for us to explore.
Okay. How many of your centers are currently hold NABH or NABL accreditations, and for the centers that are not yet accredited, so where are you currently on that accreditation process?
Frankly, we have not taken NABH or NABL accreditation directly into our centers. Prima facie being because of the fact that NABH becomes very important if you are going for government schemes, such as CGHS, ESIC schemes which are there, that holds a lot of value. But we have stayed away from of all the government business. We have stayed away from government businesses because of the huge credit cycles which are there, wherein money takes anywhere between 9 months to 18 months to come back to us. That entire working capital cycle doesn't work for us. So because of that, while we are operating highly efficient as well as quality conscious centers, we have not seen the need to take NABL or NABH accreditation because we don't, at this point of time, we have not seen any value coming from there.
Okay. And one last question, what is the average turnaround time for pathology reports and radiology reports?
Usually, with regards to radiology, we follow a TAT wherein if the reports are done by, let's say, 2 p.m. on a day, then we want them reported off by evening 5 to 6. If they're done between 2 to 5, we look to have them reported by 9 p.m., 9 to 10 p.m. the same day. And anything going beyond our scans happening after 5 to 6 p.m., we reported by 12 p.m. the next day. With regards to emergency reports, we look to maintain a TAT of 2 hours. With regards to pathology, any reports which are done again by 2 p.m., we give it off by the evening, and 2 to 6, we look to have them ready by end of day, and any pathology happening after that, we look to give it the next day.
Okay, yeah. Great. Thank you. I will be joining back into the queue and for any further questions.
Thank you.
Thank you. The next question comes from the line of Anjana Nambia, an individual investor. Please go ahead.
Hello, am I audible?
Yes.
So, my first question is, what are the major risks the company faces in its current expansion plans?
Sorry, ma'am, can you be a little louder? Your voice is a little feeble.
Am I audible right now?
Yes, you are.
What are the major risks the company faces in its current expansion plans?
So the risks which are there with regards to expansion, on the primary risk which is there with us is if the site selection goes wrong. Despite all the research and everything that we do, if after putting up, we are not able to, achieve the operational break-even within 6 to 7 months, that becomes a major risk for us. The second risk is that entry of extreme competition following up. So that is not, of course, controllable by us, but if a particular geographic location becomes hyper-competitive. Now, for those people who are from Mumbai, if I were to give an example of a location such as that, I would talk about Ghatkopar. Ghatkopar West especially has become such a hyper-competitive area because of the entry of multiple MRI centers within a very short span of time following each other. So these are the two major operational risks which are there. Besides that, the risks which are there are with regards to, again, the quality of reporting which is there, but we managed to hold that. And the turnaround times. Sometimes the patient expectations are much higher and we need to cater to deliver that. But the major operational risk is the wrong site selection.
Okay. So are pricing pressures increasing in advanced imaging services such as MRI and CT scans?
So there is pricing pressure for sure. See, we'll have to talk a little historically. What has happened is that the dollar has gone on appreciating against the rupee. The cost of machines are going up, but our scan prices for the last 15 years have almost remained the same. Just to put things in perspective, the BMC rates and the CGHS rates which were there, which were established in somewhere in 2005 at 2,500 rupees per scan, 20 years later are pretty much the same. Hardly been there incremental over there. So that definitely impacts, but the fact is that India is such a huge place where huge volumes can be done. So that's why at this point of time, we are focusing on increasing the capacity and finding ways to do scans on a faster pace so that we can offset the pricing pressure by doing higher volumes.
Okay. So, what percentage of patient inflow currently comes through doctor referrals versus direct brand-driven walk-ins?
So again, that is very subjective. So I'll talk about the start of a center. So our centers are basically hyper-local. They are catering to a particular set demography in a particular geographical area. So what happens is in the start, when we start a center, almost 95% of the business is doctor referrals. As the center matures, this percentage goes on dropping down. But even this, after in a mature center, there are doctor referrals account for almost 50%, and the 50% is by direct.
Okay. Thank you, sir. That's it from my side. Thank you for answering my question.
Thank you. The next question comes from the line of Dhanraj Solani with Kirin Advisors. Please go ahead.
Hello. Yes, sir. Thank you for the opportunity. I have a couple of questions with me. So I'll just start with the first one.
Sir, again, could you be a little louder?
Am I audible now?
Yes.
Okay. So I just wanted to know what portion of revenue comes from B2B institutional business if I compare with the direct consumer walk-ins.
See, basically almost 85 to 87% of our business comes direct customer, and the rest is then institutional.
Okay. And what is the typical payment cycle and working capital days?
You're talking about with regards to the credit business, or you're talking about with regards to overall business?
Specifically, if I speak about the B2B business, because what should be the range, typical payment cycle, you can say the credit or...
We give them a credit period of 45 days, but that does tend to stretch a bit to as high as 65 to 90 days of that time.
Okay. And also, are there any plans to actively participate in the government diagnostic contracts or even PPP healthcare products?
So while we are open to that, I mean, we are definitely open to that, but at this point of time, what happens is PPP contracts which are there, they have an entry barrier with regards to the fact that they want all machines that are being put up to be new. And that too, 3 Tesla MRIs, majority of the places want 3 Tesla MRIs to be put up. The entire project cost drastically increases because of that. So a 3 Tesla MRI new would cost me upwards of 10 crores. So, and in addition to that, the scan prices are fixed at 2,500. And in addition to that, the credit cycle is there, which can extend to as much as 18 months. So that adds a lot of pressure to the working capital and cash availability with regards to the overall business. If we get an opportunity where some of these risks are mitigated, we would definitely be open to that.
Got it. And also, if I speak about the data center, this is strategically located.
I'm sorry, can you be a little louder? I can't hear you.
Yeah.
Dhanraj sir, if you are using any other mode apart from handset mode, we request you to use the handset, please.
Okay. Am I audible now?
Yes.
This is much
Okay. So I wanted to know about the data center, which is strategically located near Tata Memorial Hospital. So are we already seeing strong oncology related demand from the center?
So in fact, in the second month of operation itself, we started doing around 80 PET scans, around 75-80 PET scans during that month, right? Given our history with regards to the Thane center, this was a much higher number than we had done in Thane at the start of the business.
Yeah, what kind of revenue? You're saying, sorry.
Yeah, so we expect these numbers to continue to grow strongly.
Okay. So once it reaches maturity, so what kind of revenue potential we are expecting to see
So
from
let me take the example of my Thane center. So on an average, we are doing approximately 300 to 30 patients over there on a monthly basis. All right. And the average revenue that we get from there is approximately 15,000 per scan.
Okay.
Now, that center is nowhere close to any tertiary center like Tata. So we are just doing the larger Thane market over there.
Okay. Yeah. So thank you for answering the question. So that's all from my side.
Thank you. The next question comes from the line of Nidhi Purohit with Finex Capital. Please go ahead.
Hello.
Hello.
Yes, ma'am.
Hi, sir. Actually, I just wanted to know, do you currently have mobile app or digital platform for appointment booking and report delivery?
So no, ma'am, we have not set it up. Frankly, we are looking to expand our network on a larger scale, and wherein these investments make a lot more sense when you've got a larger geographical presence with regards to this. But it is on our to-do list. But it is not on top of it. We will look to develop it, or we might, take on the services from a third-party app to deliver the same. But it is on our to-do list.
All right. And sir, are you already using any AI tools in radiology reporting, or are these still at an evaluation stage? And how much improvement in reporting efficiency and turnaround time can AI realistically bring over the next few years?
My personal opinion is that AI is going to be a disruptor to an extreme proportion when it comes to radiology, because radiology entirely entails observation of the images and interpreting those said images. Now, the AIs which are being currently trained on various models are seeing hundreds of thousands of studies. That is probably more studies than a radiologist has been trained on, even after our worked on after 3-4 years of experience also, right? But however, at this point of time, there are a lot of hallucinations which are there in the AI, wherein it causes a lot of positive findings in addition to what is there. So it at this point of time is acting more as an enabler for the radiologist to be able to understand where those, shall we say, suggestive findings could be, and it is an enabler for the radiologist rather than a replacement. But we are seeing very good tools to be utilized in the AI reporting field.
Okay, thank you, sir. And EBITDA margins have remained above 30% despite expansion investments. So can margins sustain at similar levels as newer centers ramp up?
Ma'am, that's a very good question. The short answer is no, because what is going to happen as our centers expand is that they will add revenue. My older centers which are there, they will continue to perform and deliver EBITDA, EBITDA to me. But as my centers expand, they will contribute revenue. Like I said, my centers will be operationally break even within 6 months. Right. So those 6 months, there will not be any EBITDA contribution coming from them, but turnover addition would be coming in. So that would drag my margins down. The second part is for me to arrive at this 30% EBITDA, it takes a period of time. So yes, there would be margin pressure, but while the percentage might fall down, our goal is to have incremental EBITDA year on year, despite the margins contraction which may happen.
Okay. Thank you, sir, for the answer.
So, ma'am, let me add that. I mean, this also is with regards to the query there from the earlier gentleman where he was talking about us giving guidance. Ma'am, we are also we are also exploring other businesses with regard to radiology. So we were already in teleradiology. We have also started now looking at overseas teleradiology. That is what we started looking, and we expect that also to be adding significantly going ahead, which would be a very asset-light vertical, wherein I would be leveraging my bench strength of radiologists to be reporting cases for the US.
Okay.
And that is where the AI tool is becoming very helpful and essential.
Okay, sir. Thank you. Thank you so much.
Thank you. The next question comes from Aditya Bhutra with Agora Advisors. Please go ahead.
Hi, good afternoon. Thanks for taking my question. So my first question is...
Again, your voice is very feeble. Can you be a little louder?
Hi, is this any better?
Yeah, much better.
All right. So I was saying my first question is related to the answer that you just gave to the previous participant. It's about the teleradiology services in the US. Right. So I'm curious why you chose US as a region to expand overseas, and if you see any significant benefits in just that region or other countries as well.
So let me just first explain, how the teleradiology of US works. So basically, what happens is the caseload of US is much higher than that can be easily serviced by the radiologists over there. So the Indian radiologists do pre-reads for them. So they are not the signatories for it. We do pre-reads for them, which are then signed off by the American board certified radiologists. Right. At this point of time, while we have entered the US market, we are also actively exploring such contracts in other markets also, be it the UK, Canada, all these places wherein the volume of cases are more than we reported locally.
All right. Then my next question is about the conflict in the Middle East, right? Because it has caused a lot of disruption in supplies, including helium. And as far as I understand, helium is used in certain radiology operations as well. So I just wanted to get a take if we have been affected in any way in that regard.
That's a fantastic observation. Aditya. The fact is that, yes, helium has drastically been impacted, and we are seeing incremental prices for the machines being impacted due to that. But luckily for us, all our contracts and everything that we had entered into were prior to these escalations coming to play. So our current expansions which are underway have not been adversely impacted, and we've managed to arrange a helium, but that remains a risk going forward. If this does not get resolved very easily, then the helium prices will impact the overall pricing of the machine. But that is a one-time impact for us, because while our MRI machines do require helium, they are zero ball helium, and we do not require on a quarterly basis. That's a one-time impact that comes in. And these machines after that are under comprehensive maintenance contract. So in case any helium requirement is there, these are covered in the comprehensive maintenance contract. So operationally, they will not impact us, but they may impact us on a fixed asset basis.
Understood. All right. So then the last question is about what has been mentioned in the investor presentation, wherein it says that we are targeting 3 times the number of centers that we have currently in 3 years. So just wanted to get a sense if you think it also translates in a similar fashion to revenue as well in the next 3 to 4 years.
Goes without saying, Aditya, just to put things in perspective, at this point of time, from the day of my IPO, where I had 4 hub centers, and overall other hub centers which were there, I am at this point of time setting up 4 additional hubs right now. So that's an almost a doubling of my hub center expansion which is there. At the same time, we are very actively focusing on the acquisitions also. We are open to acquisitions. We are looking for acquisitions along the lines of Vinchukkar that we did, wherein we can get a set business, wherein we can bring in operational efficiencies and marketing and branding to increase overall sales and incremental EBITDA. So we are looking at that, and given the fact that we are a debt-free company, access to capital is largely available to us. So that part should not be challenging, and we are again a extremely cash flow positive company. So even servicing of that debt will be very convenient, very easy for us. So that is a larger plan which is there. So that goal of expansion, increasing the numbers by around 3 is very much part of our target, and we are looking to achieve the same.
Great. Sounds good. All the best. Thank you.
Thank you.
Thank you. Ladies and gentlemen, as there are no further questions, I would now like to hand the conference over to Mr. Parth Acharya for closing comments.
Thank you, everyone, for joining the conference call of Invicta Diagnostic Limited. If you have any further queries, you can write us at research@kirinadvisors.com. Once again, thank you, everyone, for joining the conference.
Thank you. On behalf of Kirin Advisors Private Limited, that concludes this conference. Thank you, everyone, for joining us, and you may now disconnect your lines.